This is one of the pivotal moments in your journey as a trader. The global markets are gyrating, trade tensions are tightening, and inflation is intensifying. This is the FTSE. It finished flat on Friday. Global markets swayed in response to surging inflation. You'll have seen the swimming pools pouring over the top, simmering trade tensions across the Atlantic. Wall Street's wobbling and wilting under the weight of hotter than expected inflation, while European indices tumbling as tariffs take center stage. This is the UK FTSE 100. We're going to go back to that in a minute. Let's sneak over to SPY, which has been having its own tough time recently. This is SPX. As you can see, price action fell out of this tightening wedge, tested the measured move, had a retracement, and is now approaching that previous low. This is an uptrend. I've commented recently a reply on Twitter to a very famous individual who was speaking about how this is a confirmed downtrend because it's broken the daily period 200 moving average. Let's get that up now with the Rocky Outcrop Toolkit. You'll see it show up in a second. Price action breaking that 200 period moving average and then turning up to retest it in at around 5780. That double test and rejection is a very strong warning sign, but price action is not yet in a confirmed downtrend because you need lower lows and lower highs. This could be considered a lower low. This could be considered a lower high as and when price surpasses this previous low, then you'd be able to mark this guy off, but you can't quite yet do that. You've got one lower low, and as and when price action confirms below that, then you'll have a lower high. You need a lower high and a lower low to actually have a downtrend, but things are very scary. The Federal Reserve's favored inflation gauge, that's the core personal consumption expenditure PCE index, it rose 0.4% in February, which outpaced expectations, and it outpaced the prior month's 0.3% increase, with inflation remaining stubbornly above the Fed's 2% target. Investors are increasingly jittery about the central bank's next move. We have experience. We know inflation isn't going to change. It might come down, but prices stay high. Those prices are sticky. US equities endured a punishing session. Over the period of the week, it was brutal. Over the period of the day, it was also terrible. There's DJI, as you can see. One of the main influences on American politics is over the chart, with US equities sinking, the Dow diving 1.5%, S&P down 1.8%, NASDAQ nosediving 2.5%. Let's check out the NASDAQ, also absolutely terrible. There you can see approaching that prior low. Nobody at the podium here. Get in your box, mate. So particularly positive about US indices. Let's go across to Europe and look at the German DAX, and here we have it. Still doing well, having not put in yet a lower high, having not yet broken a lower low. This is very much still in flux. Let's check over with the Canadians. Similar situation, has a lower high, has a lower low, needs to confirm that downtrend. If it does, it could be a sharp shaft lift. You've got the Rocky Outcrop Flash at 7591 and a golden pocket close where the gap would also end, 7513. Strong retracements there. And here we have the European 600 stocks. You've got a gap to the top side, also recovering 236 if you go back above there. You have a lower high, you don't yet have the confirmation of a downtrend. So again, flux in Europe, a little bit less perilous than it is in the States, but still nothing to really get excited about. Meanwhile, UK's biggest export industry is facing a fierce fight. British car makers are scrambling to soften the impact of those steep tariffs. 25% levy on cars set to take effect next Thursday, which throws a spanner in the work for automakers all over the world and the broader economy. UK exported 101,000 cars to the US last year, which was accounting for $9 billion. Oh, £9 billion, pardon me. Officials racing against the clock to negotiate before that Thursday deadline. This tight negotiating period causes panic on the other side and can be advantageous to you in that process. I have a lot of experience with negotiation. The key rule is you make the other person make the first offer. And so while it seems like a very sophisticated and aggressive negotiating policy, it's not necessarily that it'll deliver the best result for America. Across the market, we see mayhem. AI cloud computing firm CRWV made its NASDAQ debut as it was nosediving. The ticker CRWV CRWV had a very strong IPO price action, doing what it typically does, pushing into these higher levels. Immediately on launch, it dropped, tested low 37, high of the move 41. So a big percent there for people who were able to manage risk well. Seesawed throughout that session, opened around 40, up about 6%, ultimately closed flat. CoreWeave leverages NVIDIA's GPUs to fuel big tech's AI ambitions. This company is seen to be potentially one of those options when you're looking at enterprise AI and talking about the expansion of the industry generally. Will an AI scaler be part of that mix? We expect it will be. So we'll be looking out for excellent entries on CoreWeave. 77% of their revenue comes from two clients, 63% of that total from one client. That one client being Microsoft means that there is an awful lot of danger should Microsoft change their supplier. You can see the price action already broke that 50% retracement, unable to recover above the 382, and you might look for it to come back down, test the golden pocket at 38. You can see an inflection point previously at the lows on the launch, and then slowing down at recovery in at around 38.76. You've got a 786 in at around 38 at 30, and 886 retracement comes in at $37. All of these targets below are very possible if the market isn't recovering, which it isn't right now, and with these threats looming on Thursday, we can anticipate a little more simmering there. Microsoft, those biggest suppliers of CoreWeave's profits, slid more than 3% following the listing. There's 4 simpler letters. So it slid more than 3%. As you can see, it's got a flashback at the top side at 390.25. That is also an important target on the charts if we're talking about regular hours, because you've got gaps in it around these areas. If price action managed to recover at that target back above 390, you can see it push up test 428 and even as high now as 440 on Microsoft would be an excellent trade there. So lots of opportunities. The 3% it slid alongside CoreWeave, the new AI darling, does suggest that there is potential issues ahead. 7.5 billion in repayments is due by the end of next year. That's an awful lot of money that'll have a big impact on the firm's growth. Financial firms are facing further fallout. PayPal now very much in the crosshairs because there's new tech tariffs being deployed by Europe on American firms, which for years have had an unfair advantage in the market. So that tariff being employed as a response to the cars suggests that PayPal will face a big extra cost. That cost is even more painful with the dropping dollar. The shares dropped 5% on PayPal after the European Union hinted that the digital service providers will be drawn into that transatlantic tariff tangle. Trade turbulence rattling the markets, policymakers pondering punitive messages, and PayPal financial caught in the middle. Analysts are skeptical about the viability of tariffs. As you can probably tell, as a student of the markets, I know there is no scenario where they work out for the imposing country. It's a classic case in the markets of sell for and ask questions later. And as I say, confirming that downtrend on SPY is important. And that person I spoke to on Twitter and replied with the comment, it's not yet a confirmed downtrend. You have to wait for confirmation because it is the single most important rule in technical analysis. And technical analysis is not a tool for making political points, nor is it a tool for trying to boost some sense of righteousness in conflicts across the world. Technical analysis is a method for controlling risk, and you need to wait for confirmation. And the downtrend is not yet confirmed. Uncertainty looms. Global markets, those markets left grappling with inflationary pressures. Geopolitical headwinds are picking up the pace, and the ever-looming spectre of a trade war is crushing market sentiment. Investors, policymakers, businesses, everybody's bracing for what's coming next, which is probably something bad. The coming weeks could prove pivotal in determining the direction of both the economy, equities, and more importantly, your portfolio. So let's go over here now to a couple of different stocks that are worth paying attention to. First one we're going to look at is this move down, has a strong volatile reaction over earnings and that dilutive news coming out from the markets. We worked out the method for pricing the dilutive impact of those shares. We came into around 12.2%. Actual figure turned out to be around high 11%, so we weren't too bad there. Price action on GameStop is desperately negative now. The reaction, which was a huge rejection, let's go down to the 30 minutes and show you that now, was absolutely terrible. So despite the fact that on the back of that earnings and the enthusiasm with regards to the further dilution, price action pushing up 38% on that news, has since come back down from that $20 target back down to lower than where it started, and having lost now 29-30% of price action. If it wants to get up again, the problem is that 29% to recover back to the top side means, look, to recover that 29%, price needs to go up 40%. And this is the problem with GameStop. Every time it drops that percentage, giving up everything it gained before, even just to reach that prior high, it has to put in even higher, stronger moves. So when people talk about short volume and it being record short volume at 31 or 40 million, that's short volume, it's not short interest. If you peddle that lie to influence the investor base, you're simply going to cost them money. And I've noticed a couple of big names in GameStop doing that recently. They're applying these details without any context whatsoever. 30 million shares sold short. That level of short interest is very different when your stock's got 70 million shares outstanding compared to 408 million like it is now, and going up to 478 million. So people who should know better are hurting the GameStop community because their emotional attachment to their own investment has now trapped them, and they feel the need to trap others. It's disgraceful, but that's par for the course in GameStop, because the community themselves will not revolt against those terrible leaders that have taken control of the community. I have set this community adjacent to all of them. There is an easy path to profitability, and if they want to take it, they will. If they want to stumble around like blind idiots in the dark listening to dumbasses who've got no idea what they're talking about, they will continue to do. And there is no way I can force people to see the truth. Unfortunately, they need to make their own way there. And here it is, live person touching the low side of a brilliant channel when it's bottoming. Let's start on the weekly time frame to make this point. Price action on live person has gone through a big retracement. That retracement came after COVID. Price action drop in there 99%. That takes it to the low that is put in here. That low confluent with important levels from the previous all-time low. Looking at price action, you can see it's an expanding, broadening wedge as it drops down. That gives you a measured move. If you should break to the top side, it doesn't even have to ultimately turn to a macro uptrend. That breakout could take it to a golden pocket retracement from the all-time high, which would be up at around $10. In advance of that, you've got an important horizontal matching a 236 from the local high, coming in at around 148, 149. That level is important for price action to break. When it does, the target is 319. When that breaks, price action will be looking for resistance. In this downward sloping trend, it's all touching and slowing on support. There's very few levels of resistance. The first one would be the top side of a gap in at around 220. Above that, 380 real resistance is found above $5, and then at the top side of a gap towards $10, the golden pocket, and that measured move from the breakout of a wedge. All of that is very interesting because the short interest on live person is in the high teens, and this thing has got hardly any stock. We know more than any other market participant exactly what's going on in live person because we own nearly double-digit percentages of this thing, completely owning the float, sucking up all liquidity available to trade. When this thing squeezes, it's going to be ridiculous. And this is the moment where you find out if you win or if you're defeated. In the stock market, that is a question of conviction and liquidity. You've got the liquidity on your side if you haven't realized the conviction. I've got enough for everybody. This thing has potential to come lower, so you're going to have to manage your own risk. That'll be in combination with stop losses and position sizing. The way you manage that position sizing is by not being greedy. We'll be here until it happens. We'll do it the right way. We'll manage risk on individual trades, and we'll make sure we enter these things so that when it starts breaking out, you're on the right side of it. The 1 hour time frame with the oscillator shows you've got extremely strong divergence here with price action only just reaching the prior macro lows. RSI coming back down to oversold outside the very bottom of the oversold here. Let's look at previous oversold levels. That was a low. That was a low. Previous oversold levels. This was as price action was at a peak, came back down, oversold. These lows here, and then consolidation at the head of a breakout, and this was the ultimate bottoming on live person. which demonstrates why that horizontal at 150 is so incredibly important, along with this level. This is where things really start to get started. Here is the high, here is low. There's your 236 at 9.4. Let's call it 9.2 to 9.4, that range. When you break that, you'll have broken an important horizontal level. Testing on to the next one is at 108. Break that, you'll be putting in higher highs. You'll have confirmed the trend change on the mini time frame, and you'll come back and test the prior high. This thing comes up probably around $2 and change. So things getting exciting. At the moment they're getting exciting, they're also incredibly nerve-wracking for people without conviction or experience, and even worse for those who haven't got any form of risk management. Now, that's a crucial part of this whole channel, the culture here, the community. Focus on it intently. How to manage risk, because it's about trading without losing. That means that your portfolio has velocity, not about picking stonking winners every 5 minutes. Though, if you need that, we've got it on the Discord all the time in community picks. We've had amazing work there recently. Some of those spectacular trades in community picks that we've covered recently include Tesla. Absolutely huge drop, and then the recovery on the bottom side there. We covered ATER, which had a 43% move minutes after we were talking about it. That was very positive. We also have got really interesting moves on a huge gaming company. We've got far more context on LivePerson on that paid side there. You've got loads of information on RSKD, an amazing little ticker nobody really knows about. We've got updates on FSLY, on CRISPR, on SLQT, on MKTW, on HSY, every Bitcoin miner you can possibly think about, every AI company, every robot company, every banking institution, every financial firm infected by the tariffs, every car maker that's changing their policies. We've got every stock covered that's making moves. We've got earnings ahead of time every single day. You've got market news on there for free. Everybody, get yourself to www.discord.gg/rockyoutcrop. It's currently a free invite. Don't think that's going to last forever. Don't think that you can just take advantage of it sometime down the road. It's now, or else you miss out. Can you afford to be missing out on opportunities like that Discord, which evolves at a pace faster than any single trader? It could be the best advantage and the best tool you ever use on your journey as a trader, no matter what level of experience you're at now. That Discord is better than you and progressing faster than you, with real traders with real experience, with a proper culture of kindness and respect. Join up at www.discord.gg/rockyoutcrop, and together the rising tide lifts all ships. Hit the like button. We redid this video because the audio didn't work yesterday. This is a new copy, and I really appreciate everybody who watches. I know I don't get the viral views on the old YouTube, nor do we necessarily get the sort of attention you'd expect considering the help and assistance we've put in GameStop, but you will always be able to see me on the internet. Nearly everybody else who talks about GameStop borrows my turn of phrase and watches these videos but doesn't talk about it because they can't do their own TA because they need this. And you can be generating all of the data, putting out all of the analysis, and doing it all in the Discord ahead of everybody else and positioning yourself to take advantage of the moves. Very proud of you. Thank you very much. Appreciate you. See you in the next show.